Welcome back to our channel. Today, we are diving deep into the energy sector, comparing two major players in the Indian power industry, Tata Power and Adani Power. With India's ever-growing demand for electricity, understanding these companies' positions and performances is crucial. So, let's get started. Before we delve into the nitty-gritty, let's set the stage with some industry insights. As of November 2023, India stands as the third largest producer for consumer of power globally, with a whopping 426.13 gigawatt of installed capacity. Requirement of electricity has increased by 8.6% from last year. To bolster efficiency, the Government of India introduced the Revamped Distribution Sector Scheme (RDSS), under which result-linked financial assistance will be provided to DISCOMs. Under RDSS, an outlay of Rs 3.04 lakh crore is fixed till 2026. Now, let's take a closer look at the contenders. In the blue corner, we have Tata Power, a giant with 12.9 million retail users and the title of India's largest solar rooftop company. And in the red corner, we have Adani Power, part of formidable Adani Group, reigning as India's largest private thermal power producer. And when it comes to power generation capacity, Adani Power slightly edges out Tata Power by over 700 megawatt. However, Tata Power boasts a diversified portfolio spanning 8 different power generation sources, reducing dependency and enhancing resilience. Please refer to the capacity distribution chart on the screen. Now, let's dive into the operational trenches. Plant load factor, or PLF, is a critical metric indicating a plant's capacity utilization. While Tata Power has shown a commendable improvement in its PLF for thermal plants, Adani Power's overall PLF has been on a downward trend, raising concerns about operational efficiency. You can see a small table comparing the plant load factor of two companies for March 21 to 23. Looking ahead, Tata Power has ambitious plans to expand its capacity. Tata Power has current capacity of 14,453 megawatts and expecting to increase it to 19,205 megawatt in coming year, with 1,209 megawatt increment in solar and 3,543 megawatt increment in hybrid. It is aiming for a 70% portfolio of green energy by 2030. Initiatives like Easy Charge for EV charging across India, for which they have tie-ups with IOCL, Assam Government, and Kanpur Municipality Corporation, and upcoming pumped storage hydro plants underscore their commitment to sustainable growth. Tata Power is developing 2 pumped storage hydro plants with capacity of 1000 megawatts and 1800 megawatts, and they will be operational by 2027 and 2028 respectively. GW Cell and Module Manufacturing Plant is operational and will have 4.3 gigawatts cell line ramped up by Q1 FY25. Meanwhile, Adani Power focuses on capacity expansion and strategic contracts to maintain its competitive edge. Adani Power Limited is expanding one of its thermal plants, adding 1600 megawatts capacity. Adani Power Limited has 81% of its capacity contracted, enabling it to adjust tariffs or pass fuel costs, mitigating losses from coal price fluctuations. Time to crunch some numbers. Tata Power leads the revenue game, showcasing a higher CAGR and sustainable revenue sources. On the other hand, Adani Power saw significant growth in FY22 to 23 due to increased tariffs to offset rising coal costs, revenue from regulatory claims, and the acquisition of Mahan Energen Limited, adding 1200 megawatts capacity. Tata Power's revenue surged in FY23, stemmed from Ministry of Power guidelines, allowing cost pass-through from its Mundra power plant, boosted distribution sales, and increased renewable capacity. Tata Power's revenue from sustainable sources gives it a competitive edge over Adani Power. Please refer to the revenue table on the screen. When it comes to financial health, both companies have significantly reduced their leverage, signaling stability and room for future investments. However, Adani Power shines in terms of EBITDA, boasting higher operational efficiency and impressive margins. Have a look at the debt equity table and EBITDA table on the screen. Adani Power's higher return on capital employed indicates more efficient capital utilization compared to Tata Power. Despite generating more revenue, Tata Power struggles to achieve higher returns due to its elevated cost structure. Please have a look at the return and margin table. Both companies have boosted margins over time, but Adani Power's growth is notably exceptional. Year by year, Adani Power maintains higher margins compared to Tata Power due to significant debt reduction, resulting in lower interest payments. Meanwhile, Tata Power grapples with consistent interest payment levels annually. Table for net profit margin is on the screen for your reference. Finally, let's talk about the market's perception. In terms of PE ratio, Tata Power appears overvalued with a PE 4 times higher than Adani Power. Conversely, Adani Power shows slight overvaluation based on PB ratio. Tata Power's rich valuation reflects its diversified vision and lower risk profile. Despite a higher PE ratio, Adani Power, while slightly overvalued based on PB ratio, remains a formidable player in the thermal power domain. So, which company stands as the better power player? Well, it's a tight match. Tata Power leads in operational resilience and sustainability, while Adani Power showcases superior financial performance and efficiency. Ultimately, we leave the choice onto our viewers to decide, as we have given the detailed analysis and data. We believe our viewers have the wisdom to choose the result between the two. As to who surpassed who, that wraps up our comparison between Tata Power and Adani Power. We hope you found this analysis insightful. Don't forget to like, share, and subscribe for more engaging content like this. Until next time, stay powered up.